Hi, my name is Sam Baker, and our financial research team of Michael Lucas, Claire Goodson, Lakedra Wright, and myself are here to present Hibbett Sports as a wise investment to potential stockholders looking for a resilient company to add to their investment portfolio. As a potential investor, you're probably wondering, why should I invest in Hibbett Sports? Well, there are several reasons, and our team will be highlighting those reasons for you based on the quantitative evidence discovered in our financial statement analysis. You will see that our research highlights Hibbett Sports as financially strong, solvent, profitable, and is also a fast-growing company. Our research also highlights that Hibbett has consistently increased annual earnings per share for their stakeholders for the past 3 years. And lastly, our research highlights Hibbett Sports as a resilient company in a weak economy and in a highly competitive marketplace. You may also be asking, what led us to these conclusions? Our research team applied the 4 financial statement analysis types to Hibbett Sports' consolidated balance sheet and consolidated statement of operations, or income statement, to give you a detailed review of this company. A vertical, a horizontal, solvency, and a performance analysis were individually applied to Hibbett's common size statements using approaches derived by our research team. We also evaluated Hibbett Sports on performance when benchmarked among competitors.
A vertical analysis was performed on Hibbett Sports. This type of analysis allows each line on the balance sheet to be viewed as a percentage of a base measure, such as total sales or total assets. This allows managers to set goals and identify trends. It's a good way for companies to benchmark off of each other and to view their performance compared to industry averages. Gross profit for the fiscal year of 2016, Hibbett Sports maintained a gross profit of 35.28%. This was very strong compared to its close competitors Foot Locker at 33.77% and Dick's Sporting Goods at 30.41%, and is a very strong indicator that Hibbett Sports is a good investment. Major changes that were noted in the vertical analysis of Hibbett Sports from 2014 to 2016 were those of cash, construction, and inventory. Cash varied widely over this time period, ranging from 15.9% in 2014 up to 19.5% in 2015, and then back to 7.3% in 2016. Construction was also interesting to note, as it started off in 2014 at 9.0% and then fell off to 0.7% in 2015. This is likely due to the completion of a state-of-the-art distribution center that Hibbett Sports developed outside of Birmingham, Alabama, in order to streamline the supply chain process. Construction is not an indicator of growth for Hibbett Sports, as Hibbett Sports typically targets strip malls and enclosed malls for expansion of its stores. Inventory also changed significantly over this time period. In 2014, inventory was 54%, in 2015 it was 53%, and then in 2016 it spiked up to 64% of total assets. This is likely corresponding to the decrease in the percent of cash of total assets that was seen earlier in the slide. Solvency. Hibbett Sports has seen consistent growth over this 3-year period, adding approximately 70 stores in each of the 3 years. During this time period, most of the lines on the balance sheet remained consistent. The only changes were those of cash, construction, and inventory that we noted in the previous slide. It's also interesting to note that the total assets of Hibbett Sports are over 3 times that of the total liabilities, indicating that Hibbett Sports is a very solvent company and a very strong investment.
Using the 2014 through 2016 Consolidated Balance Sheet and Consolidated Statement of Operations of Hibbett Sports, a horizontal analysis was performed in order to evaluate trends on the financial condition of the company. In this analysis, we used a common-size statement of the current year to compare with the performance of prior years and with the organizational goals and objectives of Hibbett Sports as a company. We also compared the performance of Hibbett Sports with their competitors, such as Dick's Sporting Goods, Big 5 Sporting Goods, and Foot Locker. The primary goal of Hibbett is to expand their operations to 1,500 stores nationwide. Currently, Hibbett has 1,044 stores operating in 33 states. In 2016, Hibbett opened 71 new stores. In 2015, they opened 61 new stores. And in 2014, they opened 54 new stores. To further evaluate these trends in growth, we selected 3 techniques for performing a horizontal analysis on the common size statements developed for Hibbett Sports. We selected these techniques because we believe the results give a general overview of how well Hibbett Sports is financially handling their growth. These techniques include basing inventory as a percentage of total assets, basing gross profit margin as a percentage of net sales, evaluating the gross profit margin when benchmarked with the competition. The growth that Hibbett Sports has been experiencing has increased inventory carrying cost as well as the cost of goods sold in the current year and in previous years. The horizontal analysis that our research team used verified this by using inventory as a base percentage of total assets. We discovered that Hibbett significantly increased their inventories from 2014 to 2016. Net inventory for 2016 increased by $42.6 million. This was a 17.7% increase over 2014. This figure at first glance may seem high. However, when comparing the common size statements of Hibbett Sports, the inventory as a percentage of assets for 2014, 2015, and 2016 was 54%, 53%, and 64%, respectively. So this increase in net inventory is a feasible amount when considering how rapidly the company is growing. As a second technique in our horizontal analysis, we set gross profit margin as a percentage of net sales in order to measure the annual profitability of Hibbett Sports from 2014 through 2016. In our findings, we discovered Hibbett Sports has held a 35% profit margin for 2016 and has also earned a 36% profit margin for both 2015 and 2014. This is excellent performance in comparison to the competition. In benchmarking Hibbett Sports' performance with 4 top competitors, Hibbett has outperformed every one of them for the past 3 years, as shown in this table. In averaging the past 3 years of performance, Hibbett came in first place with an average of 35.8% profitability. In second place, Foot Locker averaged 33.2% profitability. In third place, Big 5 Sporting Goods averaged 31.7%. And in last place, Dick's Sporting Goods averaged 30.6% profitability. In conclusion to our horizontal analysis, we have determined the financial condition of Hibbett Sports is very strong. Hibbett has performed very well in the midst of rapid expansion, a weak 2016 economy, and a highly competitive marketplace. Their strategy to position themselves to serve the small, isolated towns that big box competitors do not find feasible is proving to be a very successful objective as a profitable company. As a small town, small box retailer of sporting goods, we recommend Hibbett Sports as a must-have for potential stockholders.
An organization must utilize solvency ratios to determine the firm's ability to pay its debts as they become due. Some of the solvency ratios calculate short-term solvencies, while others calculate long-term solvency. The short-term ratios include working capital, current ratio, asset test ratio, inventory turnover, and days sales and receivables. The long-term ratios include debt-to-equity ratio and times interest earned. The working capital, current ratio, and asset test ratio determine the firm's ability to pay off near-term debt. The accounts receivable turnover and inventory turnover reveal the firm's efficiency of receivable collection and inventory management, respectively. The days sales and receivables and days sales and inventory examine the liquidity of receivables and inventory. The debt-to-equity ratio looks at the creditor versus owner financing, and finally, the times interest earned reveals the firm's interest-paying ability. Current ratio measures the relationship between a firm's current assets and liabilities by dividing current assets by current liabilities. This ratio determines the firm's abilities to cover the current liabilities with the current assets. In 2016, Hibbett's current ratio is 3.14, which means they have $3.14 in assets to $1 in liability. There is no norm for a typical current ratio, however, 1.5 is typical for organizations. And for 2015, their current ratio was 3.48, which is based upon that year's higher current assets and lower current liabilities. Current ratio can be deceiving for some organizations, as it does not reveal if the assets are tied up or the liabilities are due soon. The asset test ratio is calculated using the cash, marketable securities, current receivables, and current liabilities. This ratio determines the amount of cash or easily converted monetary assets that can cover current liabilities. Hibbett's asset test ratio in 2016 was 0.37, while it was 0.94 in 2015. This means that Hibbett's had 37 cents liquid assets to cover $1 of current liabilities, compared to 94 cents liquid assets to cover $1 of current liabilities in 2015. From these numbers, Hibbett's had more cash or easily converted assets to cover current liabilities in 2015 than 2016. Inventory turnover examines the number of times inventory is sold and restocked throughout the year. It determines how long it takes the firm to convert the inventory to a current monetary asset. Inventory turnover is calculated by dividing the cost of goods sold by the average inventory. For 2016, Hibbett's inventory turnover was 2.33, while it was 2.51 in 2015. Based on these numbers, Hibbett Sports has a fairly high inventory turnover. Days sales and receivable measures the days it takes to convert accounts receivable into cash. For Hibbett's, they have a significantly low days sales and receivable ratio. For 2016, the ratio was 1.27, and in 2015, the ratio was 1.56. Those numbers mean that in 2016, it only took Hibbett's 1.27 days to turn accounts receivables into cash. This low days in receivables means that Hibbett's quickly converts its account receivables into cash. Debt-to-equity ratio measures the amount of stockholders' equity and debt used to acquire assets. This ratio reveals how much the capital stockholders have provided. For Hibbett Sports in 2016, they had a debt-to-equity ratio of 0.42, which means they had 42 cents of capital for each $1 that stockholders provided. In 2015, the ratio was 0.39, which means that they had 39 cents of capital for each $1 that stockholders provided. Another way to understand debt-to-equity ratio is stating that in 2016, for each $1.42 of asset book values, Hibbett could suffer a $1 loss and still report total assets equal to total liabilities. Most firms use this ratio to indicate long-term solvency. Finally, times interest earned measures the firm's ability to pay interest. This ratio is calculated by adding net income, interest expense, and income taxes, and dividing that number by the interest expense. For Hibbett in 2016, their times interest earned was 346.86, and in 2015 it was 375.14. These numbers indicate if the firm is able to meet its interest payments. However, a significantly higher ratio could indicate that the firm is not efficiently utilizing excess income. Hibbett's has a significantly high times interest earned ratio, which means the firm should look at ways to better utilize their excess income.
We conducted a performance analysis on Hibbett Sports, Inc. using the primary measures of performance for the year ending on January 30th, 2016. Overall, the company seems to be performing adequately. From the asset turnover ratio, we concluded that the company made $2.11 for each $1 of assets. This suggests that Hibbett Sports is a labor-intensive organization as opposed to a capital-intensive organization, and therefore is not required to produce a high percentage of profit on each sales dollar. The return on sales for Hibbett Sports was calculated at 7.44%. This seemingly low value falls in line with the idea that firms that produce a high amount of sales with each asset dollar is not required to have a high percentage of profit from each sales dollar. With the $2.11 asset turnover, a 7.44% return on sales is acceptable and also reveals Hibbett's to be a profitable company. For every $1 of sales made, after deducting all expenditures, 7.44% remained as profit. Utilizing both asset turnover and return on sales, the return on assets can be computed as 15.7% by using the derived formula for return on assets or by simply multiplying the asset turnover ratio by the return on sales. This reveals that for each $1 of assets, 15.7% remained as profit. Looking at stockholders' profits and investments, return on equity is computed as 22.2%. This demonstrates that for the year ending in January 2016, 22.2% of profits were attributable to shareholders. Using a simple capital structure, we were able to compute Hibbett Sports earnings per share to be $2.95. This is an accurate representation of the company because there is only common stock represented in the financial reports and does not include preferred stock, convertible bonds, or any types of equity securities. This calculation is verified to be $2.95 by the Hibbett's financial reports shown here. From performance analysis measures, Hibbett Sports seems to be performing well as a profitable company.
In conclusion to our financial statement analysis, our findings have proven that Hibbett Sports is a wise investment choice for potential stockholders. Our vertical analysis revealed that the major changes that occurred during the past 3-year period have been favorable with regards to solvency and performance. Our horizontal analysis verified that Hibbett Sports is meeting their organizational goals with regards to profitability and strategic growth within the marketplace. Our solvency analysis demonstrated that Hibbett Sports has been meeting their debt obligations as they come due, both in the short term and in the long term. Our performance analysis has shown that Hibbett Sports has been a consistently profitable company in the past 3 years. Based on the results of our research, it is reasonable to conclude that Hibbett Sports will be a wise investment for years to come. The earnings per share for Hibbett stock has consistently increased in value for current shareholders in the past 3 years. As such, we would like to recommend and encourage potential investors that now is the time to invest in this profitable and growing company. Thank you for entrusting our research team to present this wonderful opportunity to you.